Donald Trump is stepping into office this week, and no matter which side of the political aisle you fall on, there's one thing that everybody wants to know. How is it going to affect my bottom line? How is it going to affect my bank account? And how can I best position my money to take advantage of the next presidential cycle? Hey everyone, if we haven't met before, my name is Jacob Turner. I'm a former Major League Baseball player, and I'm currently the co-founder of Moment Private Wealth, where we help athletes and entrepreneurs build and protect wealth. In today's video, I'm going to talk to you about 3 key things that you can do to make sure that you're understanding what could potentially happen as Donald Trump takes office. The first one is we're going to talk through what is the market sentiment, and we're going to talk about why this matters. We're going to talk about some of the policies that he's looking to put into place and how this could affect the stock market moving forward. And lastly, and most importantly, we're going to talk about the action that you can take today to make sure that you best position your money for the next 4 years. Let me just start by saying, nobody can predict where the market's going in the future, but we can plan around it. And that's exactly what we're going to do in this video. So I want to start with an analogy. I want to give you an analogy of a lake. And think about a lake, you have all this water, and then you have a dam at the end of that lake. At some point, they lift up the dam and they let some of the water go out, but the water has to flow somewhere. If we had a heavy rain, the dam goes up. I want you to think about the stock market the same way. The money that's going in is the water. If all the money's going in, it has to flow somewhere. It either has to flow into the market or has to flow to things outside the market. But when we think about the overall economy, we have all this money flowing in, all this rain in this analogy, and the money has to go somewhere. So in this video, we're going to talk about, based on market sentiment, based on policies that Trump is looking to implement, and based on actions that you can take, where that money might flow in the future. The first part of this is market sentiment. When I say sentiment, all I mean is, how do people feel about Donald Trump getting elected? And again, no matter which side of the aisle you're on, it's been overwhelmingly positive. And the reason why I say this is if you look at the data, the time that Donald Trump got elected, we saw an initial bump with the stock market. So market sentiment was relatively positive. And overall, it made some sense. You know, we've gone through 4 years of the Biden administration. We're moving to something new. So whether you agree with policies or don't agree with policies, people just generally like something new. And secondarily, when we think about market sentiment, the other thing that I'm always looking at is something called the volatility index. So the volatility index, or the VIX, is essentially a way for us to measure how do people feel about the market moving forward. So we know at the very beginning, after Trump got elected president, sentiment was really high. But as the year went on and we got towards the end of the year, we saw a really high spike in the VIX, or the volatility index. And the reason for this is relatively simple. It's kind of like what are you actually going to do? There's all this momentum moving forward about positive change that could be happening. But I think now the economy is taking a step back and saying, what are you actually going to do? So when I think about market sentiment as Donald Trump's entering office, there's lots of things happening around the world. But I think overall, the sentiment of the economy as a whole is relatively positive. And the reason for that is pretty simple. And we're going to talk about it next in the policies. The second key aspect that I want everybody to understand, and arguably the most important aspect, is the key policies that Donald Trump will actually put in place. You know, talk is cheap and action goes a long way. And when we think about the policies, I want us to think about 3 key policies that Donald Trump's talked about. The first one is tariffs. Now, when he says tariffs, there's been talk of these being 10% tariffs across the board, which would obviously have an increased price for the companies that are buying goods and services from overseas, which then would be reflected back into the economy of the United States. And I think there's a couple things to think about as we position our money if we're talking about tariffs. One, they would actually have to come to fruition. But if they do, one thing that's going to be really interesting to look at is understanding what is the cost that actually gets reflected back on the consumer, and who actually sees the biggest benefit of this, and who maybe sees it hitting their pocketbook the most. And I think one thing to think about is, if we actually had tariffs, most likely we'd see a rise in the dollar. If we saw a rise in the dollar, who does that best help in the United States? Well, typically that best helps small businesses. And if you look at some of the market sentiment right after the election, what was the one segment of the market that started to see a really big increase? And it was small cap stocks. And the reason for that was, one, we talked a little bit about tariffs, but the second component of the policies that Trump has pushed has been deregulation. And when I say deregulation, all I mean is he wants to try to make it easier for people to do business in the United States. And when we think about regulation, who does regulation hurt the most? And I think it would be overwhelmingly in agreement that this hurts a small business more than it hurts a big business. And let me explain why. If you're a big business, even if you have lots of regulations, chances are you have a lot of resources, firepower, and money to be able to potentially fight those regulations and get through and push to the finish line. Versus, think about a small business in America. If they're hit with a regulation, they might either just go out of business or just have to detour and go to plan B. So when I think about the second component of Trump's plan, who would that ultimately affect? I think it would be overwhelmingly positive for small businesses in America. And when you see the rise that we've seen in small cap stocks since Trump has been elected president, we're already starting to see how that sentiment has led to policies that's led to a effect of the stock market. Now, look, it doesn't always work like that. And remember when we talked about with sentiment, we're at the stage of now what are we actually going to do? The second part of deregulation that I think will ultimately affect the market is deregulation around cryptocurrency. Donald Trump has been a big advocate of us understanding and using cryptocurrency as a country. In fact, he actually appointed David Sachs as the cryptocurrency czar of the United States. For those that don't know, David Sachs is an incredibly smart entrepreneur, and Donald Trump has elected him to help lead this division. No time in the past has cryptocurrency been on the forefront as much as it is today. It will be fascinating to see how deregulation affects cryptocurrency. Because I think people think deregulation and cryptocurrency, well, that has to make it go up. And what I would tell you is, in a sense, yes, but in another sense, no. And the reason why I say that is this. If we think about cryptocurrency, most people think about Bitcoin. Now, Bitcoin is the most popular cryptocurrency in the world, but there's all these other cryptocurrencies out there. So deregulation might affect one coin over another coin more positively or more negatively. And the last thing that I want to touch on, the third point of the policies that Donald Trump has talked about, is interest rates. And what will be really interesting to see is how interest rates get affected for the Fed to get ultimately where they want inflation to be. You see, if rates are really high, we're most likely going to see a little bit less economic growth. And the reason for it's kind of simple. Think about a business that wants to buy another small business. If that business wants to take out $1 million in debt and it's at a 5% interest rate, that's going to be a lot easier than if that debt's at an 8 or 9% interest rate. I want to understand, how do the actions of interest rates and inflation ultimately affect how we should be positioning our money moving forward? Okay, so we touched a little bit on market sentiment. And my thought on market sentiment is it's been overwhelmingly positive. We've talked about the three policies that Donald Trump has really harped on that I do think will have an effect on the stock market and our bottom line and our bank accounts moving forward. Tariffs, deregulation, and inflation/interest rates. So I want to leave you with 3 action items that I think everybody can take to better position their money as Donald Trump takes office. The first one, and it might sound simple, but I'm going to tell you it's hard to do, is just stay the course. If you've set out a good investment plan and you've said, this is going to get me to where I want to get in the future, I want this outcome, and this plan is in place to get me there, just stay the course. And the reason why I say this is this. We make a huge deal about who's in the office, whether it's a Democrat or whether it's a Republican, whether it's somebody new or somebody that's been in politics forever. But if you look back at over every single presidential cycle over about the past 100 years, the market has been overwhelmingly positive in almost all of those. The second thing that I want us to think about is past performance is not a reflection of future performance. And here's why that matters so much. Over the past decade, we have seen an incredible run for large cap growth companies. More specifically, the S&P 500 has done incredibly well. And it's led a lot of people to say, well, maybe I should just put my money in the S&P 500. You compound that with some of the policies that Donald Trump has talked about with tariffs and the weight of that over the international markets. And it'd be very hard for somebody to say, well, I want to position my money towards the international markets, especially if Donald Trump's going to do tariffs. No. I want my money here. And what I will tell you is this. The market goes in cycles. And reality is nobody knows whether the US market or whether the international market's going to outperform over the next decade. But what I can tell you is this, that just because one thing has done really well for the previous decade does not mean it's going to do well for the next decade. And let me give you an example. Between 2000 and 2009, the S&P 500, those high-flying growth companies that we just talked about that have done incredibly well for the past decade, returned next to nothing. Whereas international companies, small cap companies like we talked about, did quite well. So what I would tell you is this. You want to make sure that your portfolio is properly diversified to make sure that you can weather any economic storm that comes. We know change is on the horizon. And although we don't exactly know how that change will affect the stock market moving forward, what I can tell you is this. Diversification is the only free lunch when it comes to investing. and I want to have that in my portfolio. And the last action item that I think we all can take is revolving around cryptocurrency. I think it has gotten over the hump of saying that this is here to stay. But I do think cryptocurrency is still at the stage where regulation and or deregulation, but essentially how the government treats it moving forward, is going to have a massive impact on what it does in the near term. And I think we will continue to see a lot of volatility with cryptocurrency. Because remember, we're at the stage of, what are you actually going to do? Donald Trump campaigned around the fact that he was going to have some deregulation around cryptocurrency. He appointed a crypto czar in David Sachs. But now we're at that stage of what are you actually going to do? Bitcoin's seen an incredible run up. In order for it to keep continuing to rise and to reduce some of that volatility, I think we're at the stage where we need to see some action. So one of the things that I'm looking at is, how is the regulation actually being implemented, and how is that ultimately affecting whether it's cryptocurrency, Bitcoin, or any other speculative asset moving forward. Take those three action items. One, stay the course. Build out the plan that you can stick with for the longest period in time. It will give you the highest chance of success. Two, make sure you diversify. Just because something worked the previous decade and money's emotional does not mean that it's going to work the next decade. And number three, be on the lookout for those speculative assets, and be on the lookout for how regulation or deregulation affects those and either increases or decreases volatility in the short term. If you're anything like me and you want to better understand how the Trump presidency might affect the stock market and your bank account and your investments moving forward, make sure you check out this video where I talked about 7 ways that you can lower your lifetime tax bill. As always, guys, I'm trying to help you get smarter with your money. So make sure you like and subscribe to be part of future videos. And if you have an idea that you want me to cover on a future video, leave it in the comment section below. Until next time, my friends.